All right, guys, good afternoon. Welcome aboard to our market recap. My name is Carlos Garcia, founder and CEO of GAR Capital. Glad to be with you today, recapping every week that we trade, obviously, and week of the markets as well. I do have a special guest with me, part of our server, obviously, our VP of Trading and Teaching, Nick DiGiacomo. Thank you for joining me today. He is on audio this afternoon. What's up, Nick?
What's up, guys? Good afternoon.
As you know, Nick is on the server doing the Nick at Night. He also talks on the blog, but he teaches most of the time. So you may not see him during business hours or market hours talking much on the blog. But when he can, he does, obviously. But it's really because of the teaching. So if you want to go a little bit into detail how your schedule kind of runs, Nick, when it comes to masterclass, what do you guys talk about? So gives everyone a little bit of a preview of what you do.
Yeah, so I mean, aside from doing the trades, I mean, typically we've been getting busy with the masterclass, so a lot of the time is spent with them, and really just going over the system, how we do things, and the other thing is futures, so that's at least as of late, a lot of the students are getting into that. They're starting to dabble in futures, which is great. So this past week, just doing a lot of sessions on futures.
All right, well, good. That's great. Glad to hear it. We're going to go ahead and I guess, what do we start with, Nick? We start with the week, right? The most important. So let me go ahead.
The week. Let's start with that.
Yeah, so what I have here, let me get this set up. So I also have Nick streaming with me on Discord today. And the reason I chose Discord is because he could see my screen as well. And then you guys can see everything because this is on YouTube, as we know, and also on the Discord server for everyone who wants to see it. So all I have to do is really just change the screen because I got to just show him exactly what we're looking at together and have consistency in the actual windows that we're showing. So let me go ahead and swap it. Give me a second. Let's change the windows. And the reason I'm doing this is so we can have, again, the continuity. All right, so the thing that we're watching now, Nick is probably looking at as well, and so am I, is the Koyfin. This is Koyfin. This is that kind of the Bloomberg, the cheaper Bloomberg alternative. So you could see this is the S&P 500. This is Bitcoin. This is Russell. This is the NASDAQ, all on your screen for the past 5 days. So let's go over it. The Dow was down 1.61% this week. Bitcoin was actually green this week. I'll remove Bitcoin because it kind of messes stuff around. There we go. You can see kind of that still slower meltdown all the way down. The NASDAQ doing the worst, down 2.9%. S&P down 2.39%. Russell down 2.25%. And again, we just said the Dow down 1.61%. So just an ugly tape all around, Nick. Would you agree?
Yes, I think it's kind of normal for earnings. I mean, we've been talking about this, and I know there's a lot going on geopolitically, but I think this week is, as you know, is going to be definitive. The market, we really want to see, if we hold up some of those levels, which we'll get into. But yeah, I mean, yes, it's it doesn't look good at the moment, but at least from a technical perspective, I think that just looking at the charts, like I said, we got to see this week coming up. We got to see if those areas hold, and if they do, into earnings, that's a good thing. And if they don't, well, we may have lower to go.
So what I brought up here was seasonality. Nick, you cannot see it. So again, my apologies. But I want you to look at this blue line, everyone at home. This is the S&P 500 pre-election seasonality chart. And again, this is something that me, Nick, and the whole team have been kind of talking about pretty much since January, right? And we've been kind of following that direction. Now, again, is it one for one? And we've talked about that. But take a look at this with me, guys. Really, since January, you could see that pop all the way. You got August pulling back a little bit, then a continuation. September pulls back a little bit. October being ugly. We talked about October being ugly. So very, very important. Now I want you to look at this blue line, and then I want you to look at this line. This is the NASDAQ. And the NASDAQ pretty much did what was expected. The only deviation was in March. What happened in March this year that kind of made everyone scared? What was the SVB crisis, right? Silicon Valley Bank. And you could see it. March, we tanked on the small caps. We tanked in the banks. Obviously, NASDAQ held up better. That was not part of this seasonality. Obviously, we don't get the script ahead of time. I wish. But you could see pretty much since April, May, got a big boost in June, July. August, we got kind of weaker. August kind of sideways, but again, based on the seasonality, we're supposed to go higher. September is when we dipped a little bit here. And then October, kind of the swoon, right? So very similar. The expectation is towards the end of November till December. That's where we get the pop. That's what it says here on seasonality. And again, you can kind of see how it looks for the NASDAQ, very similar. How it looks for the S&P, pretty similar. The S&P is still up 10% this year, Nick. So, I mean, it's not like the world is over either, but it's worrisome. Would you agree?
It is worrisome. I'll say that for sure. I think everybody can feel that.
Right.
Yeah, but we were talking about back in March. Remember, seasonally, talking about seasonality, we were saying, well, going off of history. Remember the Dow theory, right? So we said that basically if the Dow has closed above its December low by the first quarter of the new year, Dow typically goes on to make new highs. Now, if you notice, right into April.
Let's do that. Let's do the Dow Jones theory. Let's see it. DJI. Okay, so this is the Dow Jones Industrial Average. This is for the last 2 years. And you said as long as we do what in the December lows? Or what was that again?
If the Dow, again, going off of history, closes back above its December low by the first quarter, the end of the first quarter, in the subsequent year or the following year, the Dow typically goes on to make new highs. So what happened after the SVB crisis? Right? If you take a look at the chart, you'll see we closed right back above that December low, just in the nick of time.
Right here. Here's your December low. Everyone could see it here. It's right around 32,588. And the buyers came in pretty hot towards the end of March, as you could see, and we closed right above it. That's right.
I'm looking at your screen. It looks like it's loading. That could be an issue on my end.
Can you see it now?
I don't know if they can see. I'm having an issue seeing it, but they might be able to.
No, they could see it. They could see it. But I'm showing you my screen here on Discord.
Oh, that's why I see what's going on. Okay.
You got it? So what I'm showing them at home is that, yes, we did close above the December lows in March. So all green, all clear signals. Do we retest those lows, Nick?
It looks that way.
It looks that way.
The Dow, it looks like the Dow is coming in with 200. But, that would...
It's below the 200. The Dow is below the 200-day. Yes, sir. It's below the 200-day. Go ahead.
It's below it now. I was saying that it looks like we're going back to retest the SVB March lows. That's what it looks like to me at the moment.
Right.
And that needs to hold now. So to me, I think that's a good way to kind of see the what's to come.
Right.
So we really want to pay attention to the Dow. I think so. Anyway.
Well, remember, the Dow is only 30 stocks. It is a weighted index. I'm going to go ahead and take a look at the RSP. This is the equal weight S&P. This is just all stocks put together, and all the S&P 500 stocks equally weighted. So you don't have, Apple running the show, Nvidia running the show, not that at all. So basically here, I don't know if you could see this, Nick, we're still above the 200-day on the equal weight S&P. And the last time we tagged it was October of 2022, the 200-week moving average. Does that sound familiar to you?
Yes.
It does. I also posted something rather interesting, obviously, that not everyone could see it. I mean, Nick can't see it, but if he goes to the blog, I'm sure he will. If he goes to the market blog, I went ahead and posted something interesting on the 20th of October. And here it is. Back on the 13th of October, 2022, I wrote a tweet, GAR Capital tweet, right there. It says, at some point, you'll price in the worst case scenario and everything, and any glimmer of hope, you get a sharp rally. Right. Does that mean the worst is over? No, but let's go ahead and price things together, Nick. And I want to use this exercise for everyone at home, so at least I don't forget something. When I do this video, it's just me speaking. But having you on at least can help out if I miss anything. You ready for me?
Let's do it.
Okay, let's go and start with the Fed. The Fed, we don't know if they're going to hike rates. Again, the assumption is that they won't. We'll see. Powell spoke again, got the market to fall. because they are looking to see if we tighten more, or we still have a long way to go. On Friday we had, I think it was on Thursday, we had 8 Fed speakers. We are now going into a blackout period, mind you, meaning they cannot speak about monetary policy anymore. So we're dodging those bullets, right? The next thing, buyback machines for the NASDAQ. Stock buybacks begin, according to Goldman Sachs, next week. Sound familiar? What else? We have still, inflation is high, but again, falling. The CPI, where do we have on CPI? 3.7, Nick? Or something like that, 3.8. CPI, PPI, at least some of it is falling. So again, since this tweet, and the last year 2022, what were the same things that we were worried about? High inflation and the Fed. But go ahead and mix in geopolitical issues, right? Geopolitical problems. Putin in the Middle East, Putin in Ukraine. This time it's Israel and Palestine. Israel, Hamas, and what's going on in the Middle East. Could it get worse? Well, we had this discussion last year, Nick. Remember in March of last year, in 2022, the Russian invasion of Ukraine? I mean, it seems like we're kind of repeating the same thing over and over. Would you agree? And that's why I wanted to show. Since that tweet that I sent out, October 13th, 2022, the S&P is up 16.57%. And the NASDAQ's up 34. So the reason I'm saying this is that sometimes fear masks opportunity. It's just the reality. When it's time to buy, Nick, you won't want to, right?
Another thing, going back to what you were saying about the 10-year, if we take a look at that, and we talked about this, we spoke about this on the nightly videos for the guys that watch that. I know Carlos has been mentioning it too in his morning notes.
Yeah.
If you take a look at the 10-year, historically speaking, again, just going off of history here.
All right, I'm going to bring up TNX.
The 10-year is so stretched. You're getting to a point where, at least going back over the last 20 years, 10-year typically tends to top out around here. I'm not saying today, tomorrow, but I'm saying you're getting to that point now where there's only so much more you can. This thing historically goes before you get a nice pullback. Take a look at bonds, right? We saw that bullish divergence on TLT. You can see that, yes, it's getting washed out, but it's starting. You're starting to see little pieces come together that are giving you a clue here. They're saying, well, at least in respect to these things, I'm not talking geopolitically. I'm saying, what's going on in the bond market. We're taking a look at the 10-year. That stuff is looking like, okay, maybe we're getting very, very close here to things changing. At least that's what it looks like. It looks that way at least just from looking at the charts, right?
I think that's interesting. I think we're at a point of probably max fear, with so many things going on, and I completely understand. But remember, we did not hit 5% on a 10-year. CNBC says we did, but I took a look at basically all bond quotes, and it didn't. It never tagged 5, and that's fine. I mean, if we're going by the technicals, the next resistance is 5.241, because that's the level that we had back in, I want to say 2008. Yeah, it was a double top in 2008. I want to say in 2009, if you could see this, Nick. Yep, 2008. That was the highs. That was the peak, right? 5.2, 5.3%, 5.241, 5.25. That was the peak in terms of that time. And again, all we can do is take a look at what? Lines on the screen sometimes. But I think, in my opinion, I think we've topped out. 5% is a very, very big number. And again, guys, it's a self-fulfilling prophecy. I hate to say that. When you have problems and fear out there, the first thing that's going to be flowed into is bonds, because it's the safest thing in everyone's mind. I mean, you get paid based on the printing of money. That's basically what it is. So if things really mess up out there, guys, that's like a feedback loop in a sense. When things get bad, rates go lower. That's just the reality. And when things are good, rates go higher. I mean, I hate to say it sound so simple, but it's the reality. So imagine, some things really mess up out there. Let's say geopolitically, we'll say in terms of CPI, unemployment starts spiking a bit. You better believe those rates are going to fall. It's just because there's so much money sitting in cash, and then you want to make who knows if you're going to get another 5% bond yield? Let's say 3 years from now. No, actually, you know what? Let's go back 2 years from now. 2 years ago, 2021 was what? The lowest, was probably like what the lowest point at rates. Would you agree, Nick? For like mortgages? Like 2.5, 3%. That was like for a 30-year. Like some people probably thought like that's the lowest we'll get for a while. So what do? They lock in those rates. If you're a bond investor, you're probably looking now and saying, damn, 5% basically guaranteed. Who knows if I'll ever get that again? It comes to the point, it's called price discovery, where a price starts finding buyers, even if things are absolutely desolate. I mean, if things are completely crappy, let's say complete recession, people still buy homes. It's not like they don't. They do, just not as much in an economic boom. People still buy cars. People still go out. You know, reminder, the Great Depression in the 30s, you would think, oh my God, everyone wasn't working. Unemployment at its peak hit 25%. That means 3 out of 4 adults were working. So, I mean, the trains were still running. It just was a bad recession. If you remember, Nick, what were you doing in 2008 during the last financial crisis? Were you in school, I want to say?
2008.
Yeah.
Yeah, I was just going into college at that point.
Did your life fundamentally change during 2008? Were you at a bread line? Did you have to go to the unemployment office? Did you have to beg for scraps on the street?
Absolutely not.
Did you have a car?
Yes, I did.
And could you afford gas? Could you afford to eat?
Yes.
Okay. And the reason I say that is because Nick in 2008 wasn't a day trader and didn't have anything to do with the asset business or financial business. Fair enough. So let's kind of understand that if you're probably on this channel, you're in something called a financial bubble. That's where we are. We see things differently. But the reality is that in terms of economics, bankruptcies, collections, repossessions of cars, I just read it on Barron's this weekend, are high. Yes, they're spiking. That's what higher rates do. It's supposed to kill speculation. That's it, which kills inflation. But we're still at pre-pandemic levels on card collections, charge-offs, repossessions, and bankruptcy filings. Still below pre-pandemic levels. I mean, that's just the reality. So there's a lot of fear out there, and as there should be. I'm not going to sit here and say you shouldn't be worried, but I want to go to the S&P now, and I know we haven't really discussed much of it. I'm going to bring up the S&P on the daily. Nick, what are we looking at? Tell me some of your levels. Is it time to panic? Or is this opportunity?
Deal is, at least the way I see it, I think you would agree, going back at this point, since we cracked the 200 slightly on Friday. We closed with a crack below it. So have to assume 4,200 is coming, which is the 50 and 100-day cross. It's the same level that we broke out from in May. This is where we consolidated underneath.
The weekly. I'm looking at the weekly. Yep.
On the
4184.
You're going back to the prior August highs of last year. And we took it out, and what happened? You had the summer rally, and now we're going back to retest it. So the idea here is we want to see how we close next week out. If we bounce off this and that holds up, that's actually bullish because that would be a retest of the move that we had. Now, if we don't, then we have to start considering maybe 4,000 is in play. Maybe. Right?
Okay.
Maybe we want to see again that if we slice the 200 and the 100 and the 50. Maybe it will happen intraday. You'll get spooked. We want to see how we close the week out is the point, right? Because that area, at least I think to us, is important. I think it's not just to us, but I think everybody that does this for a living, they're looking at that level.
Right.
They're saying, well, that needs to hold up. Otherwise, it could be a fake breakout, and maybe we're going lower. But again, that I think for that to happen. And, we got to get through earnings first, see how the rest of these earnings come in.
Right.
And then we got to see, what happens with in the Middle East right now. I think, look, like you said, the 10-year, that I think is something that's kind of, like you said, it's basically coming to completion here. So that's one less thing I think probably the market's going to have to worry about.
Remember, if tensions in the Middle East rise and there's geopolitical risk and people get worried, traders get worried, investment banks get worried, remember, Where else are you going to put your money other than American treasuries at 5%? Unless you want to buy Japanese bonds, German bonds, you want to buy Italian bonds, you want to buy Greek bonds, fair. I mean, people can buy whatever they want. That's fair. Remember, let's look at this market always as we're always trying to ride the wave. We're trying to predict trends. We're trying to predict what's next. We're trying to buy something, for example, calls, puts, stocks, whatever. And we want for when we get into those positions, we want a position or we want an asset that's going to be attractive to others down the line that provides future growth. So if you are sitting on a fund, let's say you're a hedge fund, mutual fund, whatever, and you're in the fourth quarter of the year, you're now about to get into November. How are you going to show your clients or your boss, your P&L, sitting on cash? You have to show that you're doing something. And that's how human beings operate. You know, we go by two pendulums: fear, extreme greed. I just don't think that traders, investors, and hedge fund managers are just going to liquidate everything ahead of the fourth quarter, ahead of bonus season, ahead of Christmas time. It just doesn't work that way. It's very similar to what we had last October. And I was told, I remember everyone said, no, this is over. We're going to 3,000. Remember? All Morgan Stanley, Goldman Sachs, all these guys, 100% chance of a recession, Bloomberg said, by 2023. Didn't happen. And that's okay. People get it wrong. I know I do all the time. What we're looking at is probabilities. What sounds more plausible to you, Nick? That this is a possible buying opportunity for fund managers to start getting into bonds. Remember, the hierarchy of flow of capital, bonds is the smart money. That always gets the first flow. And then stocks go, and then alternatives go. It doesn't work. Crypto gets the flow first, and then stocks. No, it usually is bonds. Bonds is the smart money. That's how it goes. Government bonds, again, that could be different. We could take a look at high yield credit. High yield credit hasn't broken. Credit spreads have not blown away, so they are holding up. But looking at the S&P, with that cross, the 50 and the 100 on the weekly chart, remember we held the 200-day, the 200-week chart on S&P, and we bounced. And remember, we wicked it twice in October, and then we bounced. Very, very difficult time. Everyone was absolutely afraid. So now we're nowhere near the 3-week, the weekly 200 MA on SPX, but on equal weight S&P, we are. So do we wick it, Nick, here on the equal weight S&P? Is this a place, in your opinion, to start looking at buying, or would you rather wait a week, or you're saying you're done?
You wait to get earnings done. I think
earnings?
What you're doing right now is you're waiting to see over the next week or two what happens. You want to get a little bit more clarity. You're again, out of these earnings, you're gonna wait. You want to see how they come in. You want to see how the market holds up. See what happens over the next week or two geopolitically, and then I think by the end of the month, maybe the second week in November, around there after earnings are done,
that's when you start getting the move.
I think that's when you're going to start to see. I mean, again, going off history, generally speaking, when the time comes to buy, you're not going to want to.
Right.
So if you're feeling it again, just like in March, just like in October, just like countless of other times
where the world's always over.
It's usually a sign.
It's a mask of an opportunity. That's the way I see it. Now, does that mean run out and buy today? No, we're going to go step by step.
No.
But in my opinion, I think it's done. I really do. And the reason is because the capitulation always happens in October. It's the same song, same dance. I just showed you guys an example of that tweet from last year. And everyone thought I was crazy. Everyone did. I mean, that's just how we are. Extreme greed, extreme fear, extreme greed, extreme fear, what it is. I know my call of an all-time high by the end of the year is matched by Piper Sandler. At least someone agrees with me. But, don't be so sure. Markets can be very resilient. Take a look at the VIX, Nick, at the weekly. Right at the 100. Right there. The highest we have been since the SVB crisis. What does that tell you?
Sounds familiar.
Yep. I would say 23 VIX is probably your peak. That's your 200-week MA on the VIX. And again, I'm not a huge fan of technical analysis in the VIX because it could be skewed by big money VIX coming in. So we'll go ahead and leave that there. I know it's a lot of macro that we just covered, but let's go ahead and start talking about how we did this week, Nick. What do you think?
Options wise, I thought, I'll say options wise, we had Microsoft, I think 30-something%, but we got chopped up.
32.
I mean, the stock itself made new highs, but 2 days later.
Let's go and take a look
so
at Microsoft rather quickly. I have the chart up, and again, I don't want to keep everyone here forever. I get it, but again, they can always feel free to forward it. I'll kind of try to timestamp it of when we talk about certain things. Make life easier, Nick, for everybody. Microsoft. We filled the October 20th 340 calls. Kind of a rough one this week. 1 out of 3. I think we could have easily got them all, but we just got chopped. So starting here on the 1 hour, you can see a beautiful move. We got in on Monday, and you can see that breakout at 336, $4 away, right? All good. Came back down. Bounced, came back down. And again, retested 3 times that 335 level. And we had the 340s. It was only $5 away. We even got to 336.88 on Thursday, Nick. We were right there. I think we were down 10% at that point. And then we fell. That was Friday OPEX. Do you blame Friday's move for OPEX? Do you blame it where fear came out? Do you believe it was headlines? What do you think? What did Friday's action show you?
I mean, I think really the way I see it is it was what, earnings came in on Wednesday. You had Tesla and Netflix. Tesla's down big. And I think, once we started to slice, what was it, 4,300, at that point you're saying, well, you're going to the 200 and you want to see if that holds. I mean, that's just the way
the cookie crumbles.
Works, that's just the way it is. So, we were in consolidation
yes
for a while, right? We, last week's watches we were saying, well, we hold 43.70, we'll go to 44.20, and we did, and we ping-ponged in there for a couple of days, 2-3 days, and then boom, you had the catalyst. Earnings. Netflix was good, but Tesla was really weighing on the Nasdaq, and then we broke, and so at that point, it's just all technical, So I think really just that's what it is. And then Friday, that close wasn't good.
Yeah, no, the close was terrible. We had opportunities. Obviously, we could have gotten out Monday. I'm taking a look here at the daily because I really want to expand to show everyone Microsoft. And again, I think this is what makes GAR Capital stand out, is the accountability of showing you guys why did we get in what we got into. Now, just a heads up, we were, and I will always place the notes here on the actual spreadsheet, we got as high as 32%, and we reversed. Amazon was up 20%, and we reversed. Apple, we were smart. We took out for 37%. So, but imagine, you're up 32% on Microsoft. You have the trend line break on the daily. You guys can see it. A trend line break still in the uptrend. You're in the top range of the weekly. Again, look at the 78.6 fib. Even if we redrew the line, which I'll redraw the line here on the daily. Actually, you can see it here. We're still in the top end of the range. Yeah, you went sideways, and the problem is time decay. Is it weird for me to say, Nick, that if we get this bounce on Microsoft, I definitely like it long above 330? That's above the 100-day moving average.
I think, well, remember, they report, right?
They report too. Again, that's true. So we are going to watch that very carefully. In terms of support, I think you're knocking on the door. 324, 325 on Microsoft. If that can hold, I think 340 is coming. That's what I'm looking at.
345. I think it's just a matter of time. And unfortunately, I think we were in the right trade, headed in the right direction, but then
it's been a sideways.
Continuation.
It's been sideways for the name. It's been holding up relatively strong in comparison. You could see it just really since the lows of January, an uptrend. It's been doing well. I still like the name. Let's see what earnings does for Microsoft. But unfortunately, you could see it here. Just based on the 5-minute chart, you could see this is the breakout that we had. I wanted to wait for 334. That's where I got in. A $6 move got us to 340. And then Tuesday we fell. And then we popped toward the end of the day. Wednesday we fell. We popped on Thursday. You just chopped. They gave you a $6 range and you got chopped. Let's go to Amazon. And I hate it. I hate it. But that's reality. Monday, right in the zone. You're probably saying to yourself, why is this shaded? Well, the reason I'm shading it is because that's the gap fill. That was literally the gap fill that we were targeting on Amazon, and it's a pretty great one from September. And we were right there. We got hit right at the 50-day. That's when we got in, and we fell down. And that red channel here was my support, and we broke it. And you could see this uptrend, and we broke that too. So not the best price action for Amazon right now. Very similar to the S&P, below that trend line. So what do you think about Amazon this week, the past week? What do you think exactly happened? Just more chop?
Oh, yeah, they report. So, I mean,
Thursday too, yeah.
The trade itself, played it, was it not last week, the week before that? It was the same setup,
yep,
off the 100, and that was a great trade. But again, we got chopped.
And look, 132.33, that's the level I wanted. If we would have got that on Thursday, it would have been very similar to the week before with Google, where I closed too early and we soared. We had a catalyst on Friday, which was OPEX. We had a catalyst with Google, which was non-farm payroll. Damned if you do, damned if you don't. But shout out to the guys in premium that actually took Amazon and Microsoft early. They took it for 30, and I think they took it for 15. That's awesome. I mean, you got to trust the analysis sometimes. You know, I closed too early, we soar, and if I hold, we fell. I mean, sometimes the ball just happens that way. I always do the analogy of the helmet catch. David Tyree and the Giants, I mean, beats an undefeated Patriots team who smoked everyone, and it just took one bounce of the ball to lose the championship. It's just how it goes. Let's take a look at Apple together, Nick. Apple we took for 37. I personally still have the puts. So let's see what we do. Let's see. We're breaking down on the hourly. And again, I love this name. You know me. But if the chart's talking, we're listening, right? We have a gap to fill here at what? 166.79. What do you think? We hit 170 soon? We have the 170 puts. That's pretty much what your next target, the 200-day.
Yeah, pretty much. I mean, again, they report. So you really want to.
They report in November.
Oh, November. That's
November. Right. So we may have a little bit here.
See if it breaks the 200. But the other thing is the last one was Tesla. I think that one that we were talking about.
Yeah.
That trade is still open. So
yep.
What's interesting about that one?
Real quick on Apple, I want to make one more. I want to put one more point on Apple. I'm sorry. We still have the gap to fill at 167.18. So we have the 170 puts. So we're looking pretty good. I mean, I guess Mondays have been pretty strong for the markets lately. I think we've been up like 9 of the last 10 Mondays. So it's been absolutely on fire. But in terms of Apple itself, Apple's not exactly dead. I mean, Apple's back at the level of the August breakout, of the August push that we had back in 2022, which we rejected. Very similar to that downtrend that we had in S&P. Then it finally broke out of it, but it's still at the 61.8 fib, it's still above it. It's still in the top end or the top half of the range. The 50% retrace is 161.11. So, I mean, are we talking about that level? Do you think 161 would be a floor? Do you think that's a possible target? Or do you think we fill that 166 gap, they call it a day, and we bounce it?
I see these earnings.
It's just all on earnings for you.
I think right now, yeah.
Okay.
I think so.
Yeah, and we caught that one. That was nice on Apple, but I still think there's a little more downside on it. So Tesla, you're looking at it with me below the 200-day. You're below the triple bottom. I guess not a really triple bottom. You had a breakout and then a retest and then a retest of the fall. There's a gap to fill at 240.41. What are you seeing here on Tesla? You think we still got a little more to go? Remember, they already reported.
Right, so the catalyst is there.
Yeah.
Bring up the weekly for the guys. You're coming in right around 206 or so, and then you want to see if that holds. Probably will.
I'm going to make the call here. I think that 200 to 205 Tesla is a buy. I'm going to say that right now. And again, the reason I'm saying it is twofold. One, again, we know how fear happens in October, right? And when you want to buy, you don't want to. Yes, we know. But the second thing, Tesla, when it falls 10%, it usually over time bounces. It's just how it goes. We have statistics on it. Let me actually read you a good note on it, Nick, in regards to Tesla post earnings. This is the last 12 quarters. The earnings move in July 19th, down 9%. 30 days later was down 18%. The max drawdown was 18%. This is July of this year. April of this year, down 9.7. So again, the last 3 earnings moves for Tesla have been red. 30 days later, that April of this year, we jumped 10.5%. But the max drawdown was 5.7%. How about this? On January 25th, we had earnings for Tesla, 11% gain. I believe the next earnings report for Tesla will be in January of next year. So 11% pop, 22% move 30 days later. How about that? And that was even with SVB and all that stuff in March. So if we look at Tesla post earnings, 30 days moves, up or down is about 15% range. The max drawdown is about 8%. The max rally for those moves is about 13%. So if we did the math, right, we want to make sure we always have our math. Let's do an 11.2% probability on both sides. So 11% of 212 is $23. So $23 plus 11 equals 234, right? Slightly under the gap fill, but if we fall another $23 below, we're right around the 190 level. So what do you think, Nick? Is the worst over for Tesla, or you got a little more room?
I say you want to see if it holds 205, 206. If you get a close above that, it's over. If you don't, it's not.
Okay. So 205, just stay above 205 for heaven's sake, and you'll be okay.
More or less.
And we have puts. And our puts is the 200. So we know our target. You can see right there. We're down about 5% on them. But I have the 200 puts for this week. Again, we don't have any more catalysts for Tesla. That's over with. So again, we're playing technicals on the weekly. We're going to see if we tag 205.09. Again, I have no problem shorting, guys. Me and Nick have no problem shorting. We shorted last week with QQQ. Monday we bounced, and what happened? We went ahead and got in the money anyways. Imagine that. Let's take a look at the month now. You could see 9 out of 14, not optimal. But again, take a look at some of the names that we had right. IWM, as high as 30% on the 6th of October, the 28th of September. Microsoft was up 32%. Amazon was up 20 and reversed. Google, again, I closed too early. Really, the only loss that we had this week based on the analysis was NVIDIA. The 470 calls back for October 2nd. And because
And then they were in the money the next week.
Right, and the thing is that we'd be a lot better if we didn't have to notify everybody, Nick, when to close. But that's what makes GAR Capital great. You know, it's easy just to say, I like this, I like that, and just throw this stuff on the board without any recourse, without any, accountability. You know, that's really what signals are. But we do things a little different. We want to let you guys know when is the right opportunity to get out, when to leave a runner. And again, that's kind of what hurt us because, we're 9 out of 14. If we would have just said, hey, it hit this much and it hit that much, I hope you got it. You know where we'd be this month, Nick? 13 out of 14, with NVIDIA being the only loss. So do you think, in your opinion, Nick, you teach students, you talk to students every day, do you think you would deviate from your trading plan, take some profits a little early, or kind of, stay with the ship, ride the ship? What do you think?
The way that we talk about things, and I believe this is the reality and the nature of the business, is that look, you can get the direction right. With options, look, you're going to have periods where conditions are what they are.
Right.
The last week or so we were in consolidation, so you're trading strength off of support. You're trading the names that are breaking out until something changes. Now, when we have a clear trend and we have one now down at least to 4,200. At least that's what it looks like.
Yeah.
Right? Unless we get back above that 200, you can play that down with pretty easily, right? But when you're in consolidation and you have earnings and you have Fed speakers and all this stuff, it's
This week we had Fed speaker, but that's over with next week.
You get whipsawed, and it's not about the system. The system itself works. It's more or less the conditions within the conditions that you're using the system in.
Right.
So conditions, they change. It's kind of like taking a boat out. Are you going to change your boat if the seas are rough? No.
Change the sails.
No, it's just the fact that you're not going to change really much of anything. You might wait to do something.
You adjust the sails.
Right. You might adjust, you might not do anything, and we didn't take a lot of trades last week.
No,
Right,
right. We were
so
actually pretty light, which I'm very, very proud of. Let's go ahead and pivot towards the week. This week, we have flash manufacturing PMI on Tuesday, new home sales, advanced GDP, core PCE, and of course, Fed Chair Powell is going to speak on Wednesday because, we need more obstacles. This game isn't hard enough as it is, Nick.
well,
We
I
had to
get
make death mode in terms of like Super Mario back in the day when you used to make your own. I'm old. Super Mario Maker. That was the game where you just made some crazy hard levels that are like impossible to beat. I mean, sometimes I feel like that when it comes to these Fed speakers, Powell, and et cetera, right? I got to go ahead
yeah,
and
like
actually post something. Let's go ahead and do it. I'm going to go to earnings. See, earnings whispers. I don't know if it was posted, but I'll go ahead and do it anyways. Earnings for the week. Okay, I got it. So we have, and I'm going to show this on Discord. Let's see. I love our Discord, man. It's like our own little social media. Would you agree, Nick?
it's great.
Okay.
Yeah, I love it.
Let me see if I can get this going.
Make sure you guys, at night. I know you guys are. Carlos is always posting stuff during the day, but we have a lot of information that we post at night. Just statistics, things that just I think people should be aware.
Information.
Of,
a lot of people, a lot of the members love it because they may not trade what we're saying, but they take that information and they do what they want with it, and that's really the kind of the deal too. Yes, if you want us to give you fish, if you want us to tell you where the fish are biting, that's fine. That's totally cool with me. Everyone is different. Again, use the information that benefits you. You don't have to trade the way we trade. You don't have to. Let's go to
trade was nice. That was a nice one.
The gold one. Yep. Earnings here. Let's see what we got this week. Went ahead and posted it on the Discord. Excuse me. Coca-Cola on Tuesday, Verizon on Tuesday, Microsoft and Alphabet on Tuesday after the bell. Snap, Visa, Teladoc, Boeing on Wednesday, Metaverse on Wednesday after the bell, IBM, Amazon on Thursday after the bell, Intel, Enphase, they got hit this past week. Pretty much everything got hit. And then we have some of the refiners, oil, Exxon, Chevron, what have you. So big week this week, Nick. Is there any one name that we can look at before we wrap it up today on the actual earnings side that you're the most interested in?
I think Boeing is interesting.
All right, let's go ahead and chart
It's interesting just because it's so beaten down. Now, granted, I'm not going to take a position ahead of earnings. It's typically not what we would do.
Yeah, for that we're gambling. I get it.
Well, we want to see the reaction because
Yes.
it's so beaten down. And I'm looking at the chart. And I'm like, well, you really want to be short Boeing? I mean,
Yeah, you're shorting in the shoe is what we call it. Shorting in the shoe.
Right.
Yeah. I mean, you're below the 100-week moving average. Your biggest level next is 176.42. That's really what you're looking for. You start breaking that, then things are going to be, yeah.
The chart doesn't look good. I'll give you that, but
it doesn't.
it's
Not
just
technically, no.
It's interesting because you have the catalyst coming up, and we want to see how this one holds up into the end of the week. Again, these next couple of weeks, guys,
Make or
really
break.
are
Make or break.
right. They make or break, but it's also a good time to take less shots. Be very keen on what you're kind of the environment that you're trading in right now. Towards the end of the month, things I think will get a little bit quiet. I know that they will because earnings are going to be over. So by the end of, I think the first week of November, that's it. At that point, I mean, you don't really have a lot coming at you. And I think that there'll be more clarity. That's just the idea. You'll have more clarity. You have less things coming at you, and trading will be, I think, better.
Just the week before, we were 6 for 6, and we also had an extra one for Masterclass. Microsoft and Amazon did hit, profit levels, but not where we closed it. We did at least catch Apple for the end of the week, and we stopped Tesla open on the signal side. So I like where we're standing, but it just sucks that we've really done very well. It's just kind of putting a bow on little things, kind of cleaning up those little things. Man, I wish I could take Microsoft at 32%, but when you're $3 away from the target and you're getting momentum higher and it's Monday, I mean, I really thought that would have been bags, to be honest, if we would have got that momentum. But, damned if you do, damned if you don't, because if you close too early and it soars, that's Google for you. So I think this week we're definitely going to be extremely careful. If we can
Get
start
these
off
earnings out of the way.
the week with Tesla hitting that target, what do you think? 205? That'd be nice. Kind of get us a little bit of juice ahead of the week. Sure. And remember, we don't have any holidays, guys. It's straight 5 days of trading per week, really till Thanksgiving. So we don't have any holidays. I don't know if Veterans Day is a holiday in terms of the market. I just want to make sure we do that before we wrap it up, because I know once we get into December holiday season, sometimes volumes get falling a little bit. Yep. Veterans Day is not a holiday for the stock market. I think it is for the bond market, but we have straight trading all the way till November 23rd, guys. So I understand that when it comes to the market, when things don't go exactly what you expect and you got volatility out there, that's usually a sign. I mean, we've seen it. That's usually a sign of bottoms. Now, again, could we melt down and go down to zero? Yeah, I mean, sure. Nuclear weapons go off, sure. But let's kind of be realistic. It's kind of the same thing that we saw last year. Could this be a break? Sure. You just got to be ready. You just got to be prepared for anything that's possible. That's why it's step by step, day by day. And we're going to give you all the information. Right, Nick? That's kind of the deal.
That's it.
So we'll see what we get, Nick. Thank you so much for joining me. I hope we didn't go too long. I'll go ahead and place the timestamps of what we talk about in terms of the macro and then talking about the actual week itself. So again, just Tesla being open. We do have the 200 puts. So we'll see what we get. And hope everyone has a nice weekend. And we'll see you guys bright and early for the Monday morning notes at 9 a.m. with me. Nick, again, thank you for your time. If anyone is interested in learning from you, how do they get in contact with you?
You can always send me an email, guys. nickdgrcapital@gmail.com, or you can send me a message on the Discord. I'm always there.
Yeah, he's always on the blog. And then we'll see you for the nightcap, Nick at Nightcap on Monday as well.
Right. The watches will be up later, guys.
Yeah, the watches
Enjoy
as
your
well.
Sunday, all right?
Yeah, enjoy your Sunday. Have a great rest of your day. We'll see you then. Cheers, guys.